Good afternoon, everyone. Good evening or good morning, wherever you are in the world. It's Thursday. It's the 6th of March, 2025. We got the ECB rate announcement in a couple of minutes, about 12 minutes or so from here. Excuse me, my glasses have steamed up. Problems of old age, my friends. Hope you're well. We've had a good. Well, we had a bad start to the week. We lost something like 100 points, I think, on Monday. 141 points on Monday, but we've recovering quite nicely since then. So panic and fear not, my friends. Yesterday, obviously, I mean, the whole thing is still swirling around what's really coming out of Washington. The news changes literally by the hour. We had Trump saying yesterday, relieving pressure on 3 of the major car manufacturers in Detroit. So we had a bounce in those, in Ford and General Motors and what have you. But the things continue to swirl, particularly with Canada and obviously Mexico. Their imminent incoming tariffs, an extra 10% on China. The Chinese have said this morning, as they have been all along, what's the point of these tariffs? We want fair, open trade, blah, blah, blah. Obviously, Americans are pushing back, saying, well, we've got this massive trade imbalance. We want to try and rectify that. We want some manufacturing and services business coming back to the United States. It's been his rhetoric from the first term. It's more so this term, very much focused on that America first. Obviously, many allies and enemies equally talking about isolation policies in America will ultimately not benefit the US consumer, US businesses, and the US people and democracy. However, he has this mandate and he's pushing forward with it. So today we are focused on the announcement from the ECB. Yesterday, after I'd left you, services PMIs out of the US were better than expected. We had a bounce in stock markets yesterday. We were up 1.1% for the S&P 500. The Dow jumped 1.14, and the Nasdaq, the worst, but also therefore had most to bounce, was up 1.46% into close. Obviously, we talked about the ADP number coming in much weaker than expected yesterday. So what that heralds for non-farm payroll tomorrow, we'll see tomorrow. But so far today, we've had stronger services PMIs from the US yesterday, I should say, 62.6 for the prices, which is obviously adding to this idea of inflation, and 53.5 for the services, or the non-manufacturing PMIs, the Americans call it. Remember, these are forward-looking bits of data, and positive, and the S&P Global measure as well was also better than expected, but weaker than last month. Or the key ISM was actually better than expected, and also better than last month as well. You can see here 53.5 from 52.8. So that was yesterday. We had a continuing weakening in the dollar. We've been long from a couple of nights ago here on the euro dollar. We've rallied, hit our first target around about here for 30 pips. And we've taken another 170 pips out of this completely. I'm out at the moment because of the ECB. I've left the euro pound position open, but this, looks like that's significant. See the MACD here significantly rolling over. Prices are holding at the key 108 level. So 108 was enough. I got filled at 107.95. So a nice profitable trade for euro dollar. And as you say, if you look at the daily time frame, it's very parabolic in the last few days. Look at that spike. A lot of it yesterday was obviously on the back of the Germans changing their fiscal. The Germans in particular changing their fiscal temperance, allowing significant investment in infrastructure and the defense industries, 500 billion euros, and obviously lifted euro all week. So we've from struggling to hold over 104 last week. Here we are all the way at 108. So big, massive 400 pip move for the euro. We didn't get all of that, but we've got 170 pips out of it. Thank you very much. That's enough for me. You do that, a couple of days a week. Happy days, my friends, and that's really what it's all about. So anyway, let's get rid of my great big head. You don't want to see my big bald forehead, do you? Let's rearrange that for you, so as this screen's a wee bit bigger. There we are. It's much more likely, isn't it? So where are we? Rate decision. Well, We should go back to the calendar here. I don't know if it tells you very much on the calendar here. I don't think it does. Yeah, well, other than we're expecting a 25 basis point cut. That is more or less, as things become, as definite as things become in markets, that's it. 25 basis point, it's nailed on. The issue now is particularly how Lagarde performs at the press conference. If there's any changes, significant changes in the statement, and also where they go from here. Markets are still anticipating, even with this big ramp up in spending in Europe, in France and UK, and obviously UK is not part of the ECB, but a major economy obviously in the European continent, regardless of what Brexit imposed on us. And obviously France, and as I was saying, some of the peripheral countries, Spain doing quite well, Egypt, Greece as well, Spain obviously, and in Italy, another key economy in the EU zone. So this idea of a German European army, where they're going to get all these armaments from, where they're going to get all these troops from, that question remains, and how far this is going to actually come into actual reality, and how much of this is rhetoric and spin on the back of the Trumpmeister in Washington. So again, see how that pans out. But he's sort of drilling down on his pledges in the election, and he's still talking as if he's still on the stump some days. But anyway, never a dull moment. Volatility as traders is what we want, and volatility is what we've got. And so, if you're the right side of a move, thank you very much. So you can thank Mr. Trump for that. Really what I'm looking at is really any changes in the key statement. I'm not really expecting very much in the actual written words. But again, Lagarde is a proven performer, if that's the right word, at press conferences. She's obviously a politician and a lawyer by training. She's very good at fronting things and talking things up. And we are here. They've talked themselves into this next rate cut. It's 5 or 6 now, isn't it? It's an awful lot. So we'll see what comes in 10 minutes and see how things perform. But I say we bagged our profits on the euro. Euro pound is still exposed, but see what comes of that in 10 minutes or so. Let's have a quick run through the rest of the data this morning. The construction takes about 8% of the UK economy, so it's not significant. Although it's it's symbolic. How many cranes are stuck up in the city of London or other major cities in London? How much house construction is going on? There's a big drive from the new Labour government to do that. But construction PMI in the UK sank quite significantly, 44.6. That was a big miss for February. The weather hasn't helped really on that side of things. And just counting the cranes in London, they are relatively low compared to how they've been in other years. So just watch that as well. But that's a negative tick for the UK economy. The construction PMI is coming in at 44.6, still very much in the decline zone. If we look at sterling today, it's still bid. We're still long this pair. There we are, but it's not as strong as the euro's been today. We've spiked to 129.20. So we're over 129 still. That brings in the next big psychological line in the sand at 130 level. Where we are now, but we're cooler today for sterling. As I say, euro sterling, we were still we just got across as euro sterling. We're still long that ahead of the so there's a bit of risk there, obviously, because we're ahead of the ECB. But where did we get in? We got in here excuse me. Yesterday, was it yesterday the 5th? It was a short trade, wasn't it? It was just yesterday we opened that one. And we're in the money 83.80 at the moment. I think is that our target there, 83.84 something. Yeah, that's right. Yeah. So we'll see how that transpires. But our stop loss is all the way down here. I should have moved that up, to be honest. But we'll do that. It's an end of day position, so we'll do that later on today. Let's see what happens on that reaction from the ECB. I said no particular surprise. So not expecting much volatility on the euro or euro crosses. From the ECB announcement. As I say, there may be some more volatility when Miss Lagarde has something to say later on, half an hour after the announcement. So 3 minutes time we get this statement and the decision comes out. But I say markets nailed on a 25 basis point cut. Continuing claims at the bottom of the hour in 15 minutes, so we'll hang around for that. Remember, we had the initial terms, we had that big spike up last week, an extra 22 or 21,000 from that 222 to 2200 level we've been at. We're expecting about 235,000 this week. We'll see if that continues to be undershoot given what ADP did yesterday, but the ADP may be the outlier. We'll see. And then obviously tomorrow we have the key non-farm payroll. If you scroll down to tomorrow, we're talking about non-farm payroll get this time tomorrow in more detail. Around about 160,000, a bit of a bounce up from last month's big shock where we had that massive miss. So we'll see. Policy decision, I say, in literally 2 minutes, and then a press conference comes in half an hour after that. So lots going on today. And a lot of chatter later on. We got Waller from the Fed and Mr. Mann from the Bank of England later on tonight as well. Obviously, the press conference from the ECB we're focused on, and Harker as well from the Fed later on. So let's have a quick look through the majors. Actually, where are we? Let's go back to the euro and gold on this. Majors on the announcement. So we're trending long. Daily is long. 4 hour remains long. We've got out initially 4 hour looking at the signs, cooling at 108, completely natural. The hourly chart has flattened right as it's ran right into, as we've ran right into the key 108 area, an area we haven't been to for 4 months. It was, if I just quickly go back to the daily time before the data comes out, go back to the daily time frame, you can see we were last up here at 108 all the way back here in November, so 4 months high, but it's been a parabolic move as fundamentals have changed for the ECB and Europe area, and although it's technically overbought, that has still perhaps got some time to run. So the idea of parity, which we were talking about at the beginning of the year, most players are now talking about at least back to 110 and possibly this 112 zone as well. And then that brings in 115, but we'll see how much more legs that has got if the dollar is going to continue to weaken. But let's just come back to the immediate 5-minute charts and the reaction to the ECB in a minute. Let's just look at that. So there we are. So obviously the data's come out and we spiked to the upside here on this immediate reaction. Nothing really to be surprised about. So we have cut rates by 25 basis point monetary policy decision as expected. Let me see if I can quickly run through scan the statement while I'm actually here with you. There's nothing. So yeah, deposit facility down to 2.5%. The actually, let me update the calendar. You can see it for yourselves. Thursday, where are we? Oh, this calendar does my heading. Thursday, ECB, here we are, marginal lending rates at 2.5% from 2.7% for the DFR, the deposit rate, and the interest rate 2.65 from 2.9%, very much telegraphed by the ECB and members of the ECB. We'll have a look at the statement in a minute when I can get a first draft of it here. Let me just have a quick scan of the site. The site's not letting me connect yet. It's nothing there. As an immediate spike is the euro's gone back to the upside, significantly to the upside. So there we go. We got out at where we wasted 40 pips. People will say to me, no doubt, today. Sees inflation at 2% from 2.1%. So coming down in the statement. What else can I see here? Let's have a quick look. Marginal lending at 2.9%, monetary policy becoming meaningfully less restrictive. That's the key thing. Meaningfully less restrictive. That's quite a phrase. Meaningfully less restrictive. So we could see that, you know, the euro to move. So that was an end of day position. Remember, I had on that. So I'm happy to have taken that out at 107.95. Obviously, we're at 108.40 now. Short-term basis, that's a new high, a new 4-month high we're at. So let's see how this cools. But that's looking fairly positive for the euro in the immediate aftermath. In becoming increasingly, using exactly the same phrase here on my Reuters feed here, and the Bloomberg TV I've got on another screen here. Monetary policy becoming meaningfully less restrictive. That's quite a statement. That should potentially see more bid on the euro, and obviously with this fiscal controls from Germany in particular getting thrown out the window with Mr. Merz coming in as Chancellor as well. It probably would have happened under Scholz as well, given the incredible situation we find ourselves in Europe, thanks to Trump pulling back from Ukraine and siding with Mr. Putin. I can't believe I'm saying that, but there we go. Yeah, euro relatively positive. 2-year German yield is down a tad, 10 years up, and the 30-year German yield is up as well, 2.856%. The German 10-year yield. That's a sort of the benchmark for European government borrowing, government investment. Steady to adjust. The Governing Council remains steady to adjust all instruments. That's a fairly pat phrase. That's nothing of a surprise from there. Rate cuts are meaning new borrowing less expensive for firms and holding it. So that's should we see some stimulus, but we haven't seen that, have we? You know, these PMIs remain quite moribund, especially the manufacturing ones. Disinflation process is well on track. Yeah, it's still a bit sticky as far as I'm concerned, but that's a highlight. Inflation has continued to develop itself broadly as staff expect. That's fair enough. Headline inflation seen as averaging as 2.3%. For 2025 and 1.9% in 2026. So they're expecting quite a significant fall off inflation. Whether that'll actually follow through or not, obviously time will tell, and nobody will remember to said that here. That's why the minutes are always quite important about what was said at the time. The upward revision in headline inflation for 25 reflects stronger energy price dynamics, i.e., are we going to get more gas from the North Americans, more from Qatar? We'll see. Core inflation seen averaging at 2.2% in 2025. Challenges continue. Growth projections to 0.9% for 2025. They've been downgraded. So growth has been downgraded for the EU in this current statement. 1.2% for 2026, 1.3% for 2027. This reflects lower exports, ongoing weakness in investment, in part from high trade policy uncertainty. ECB to follow a data-dependent and meeting-by-meeting approach to determine the appropriate policy stance. That's classic central bank speak. Let me just reiterate that. ECB to follow data dependent. They've all been talking about that, particularly the Fed. Data dependent, meeting by meeting approach to determine the appropriate monetary policy stance. You can just hear Ms. Lagarde saying that, can't you? We are not pre-committed to a particular rate path. So we had an initial spike in the euros we've seen here. So that's the area to look forward to today and going forward, guys. 108.45, a new 4-month high for euro. Key thing about that, two things. One, it's just shy of 108.50, so it didn't get there. That's again psychological and also technically quite significant. So 108.45, not 108.46. On the immediate reaction. So that's to be watched to the upside when Miss Lagarde gets a hold of the mic later. And as you can see here, today we've been holding the 108 area. So you could also anticipate a potential spike if she says anything that surprises or nerves players about the EU or this commitment to the fiscal changes in the EU and Germany later on. So 108 and 108.45 is the range really in play on an intraday basis, guys. Stocks have taken a whack. Let's just have a look at the DAX on that. We've looked at Europe. The futures in America are down really significantly, 1.76%. The Nasdaq 100's down, S&P 500 down 1.4%. Let's have a look at our indices here. So the DAX 23 still holding it, round about all-time highs at over 23,000, but we went higher again this morning. This was from early in the week at 23,300. So this is the 5-minute chart. If we just go back to the hourly chart, you can see. Not what I want to do. There we are. So this was this morning as we opened. We went to 23,400 or 23,450 was the new all-time high. Let's just move that up. There. Let's just change the settings while we're here. Hope you don't mind. 23. That was the third of the third. It wasn't the third. Today is the 6th, isn't it? So ahead of the ECB. We went higher again to 23. What was it? 45. 45. Let's make it 45. Now for the DAX, so DAX continues to benefit. 23, 4, 5 is what you want in there. Joe. 5. There we are. 3, 4, 5. There we are. And we've cooled ahead of that, and we've cooled immediately here, as you can see. If we go down to the, the 5-minute chart. So the announcement came out here at 15, didn't it? Where are we? There's our first candle. So we've been sort of moving lower all morning, and we continue to move lower. So again, trading the DAX on an intraday basis, which I like to do as well. New day lows have been taken out, so we're biased to the downside. Our daily low before we before the Fed, before the ECB was at 23,068. We're just on that, or we've been in to test that, and we're back to 23,000. And 100. A lot of my friends and colleagues love to trade the DAX on an intraday basis, and I like to do that as well. So bias short positions on the DAX today as we go down across the water. Or next door in France, the CAC is also down here on the 15-minute chart, unsurprisingly, and the FTSE at 8,600, also very similar pattern today. Sold off on open and continues to decline, but daily lows. We just bounced off that again, but you can see that quite a correlated pattern, but there we go. So summary, we have cut from the from the ECB. No particular surprise there. Big news is this idea that they are becoming meaningfully less restrictive. Monetary policy MP, becoming less restrictive. Disinflation is well on its track, and we are not data dependent. We are data dependent. Again, there's nothing new there. Meeting by meeting approach to determine the appropriate monetary policy stance. We are not pre-committing to a particular rate path. Again, something they've said before, and just really reiterating. So Euro spiked on that. Yields moved as well on that. They've downgraded growth. They've reduced their expectation for inflation. So headline inflation 2.3% for 2025, 2.2% the key core number. So we may see some more cuts from the ECB, but they're not predetermined. They're not committed to a particular approach, and it's meeting by meeting is what's been said. And I'm sure Ms. Lagarde will get questioned on that later on, and I'm sure she'll defend her position quite nicely. And I'm sure if some of the big players have been caught out on this move, they'll be trying to either offload or collect positions on anything Ms. Lagarde says later on. So watch the volatility, my friends, and we'll have a look at the DAX down. While we're here on the indexes, let's have a look at the US markets. They've been woeful recently, but a very similar pattern, as you can see here. From the opening trades this morning on the futures on the Dow, down at 42,500. If we go jump that back up to the daily, we do this every day, don't we? Yeah, our trend remains set. Thanks very much. Which we identified a while ago, and down we go, and again we're into this cluster again. We talked about it yesterday. Key area around this 42,500, and then obviously the next support zone is here from the beginning of the year here, the 9th and 10th of January, I think it was, wasn't it? 42,000, and that also coincides with the end of October, beginning of November, so 42,000, next big line in the sand for the Dow. But the trend, as you can see there, quite nicely on that daily time frame, remains to the downside. Nasdaq 100, I know a lot of you prefer the Nasdaq to the Dow. I personally prefer the Dow because it's bigger numbers, but yeah, it's relative, isn't it, Nasdaq? can move around, has more volatility. But Nasdaq next support area again takes us back to this November low here at under 20,000 at 19,965. We've been saying that for days now, haven't we? So yep. From two doji candles, we're down today at the moment. We'll see again how today finishes. Lots of volatility on Tuesday when we put in that new low there at 20,045. So that's obviously the local low, recent low, which coincides with that beginning of November, end of October zone we got here. We saw on the Dow. Okay, and just whilst we're here, S&P 500, similar move, breaching low. There's that line we put in the other day, 5720, the 5700 area zone we talked about a while ago. Again, from that end of October, beginning of November, ahead of the election, and we've given up most of Trump's stock market gains. At the moment, Mr. Billy Bitcoin, whilst we're here, has had a very volatile week. We're back under 92,000. We briefly had a spike over it this morning, having rallied up last 2 days, but we haven't been able to hold into this key support area. So this is becoming more of a resistance area in the support area now. So we do need to get back over that. We've now got the 20-day moving average. Remember, which we've been under since all of basically all of February, significantly. Here we are, sort of beginning of March is also a whole month on the 20-day moving average for Bitcoin, and we haven't been back into this 92,000, 100,000 channel for a while now. So we struggled to get into there, and we've turned around this morning again. So let's see how that moves forward. So so it's still looking relatively weak, Bitcoin. So we could obviously next key line understand that 78,000, then 65 below that, as we said many times. But we'll see. Obviously, the end of day support sits at the 84,000 level before we get to that 78,000. But yeah, 92 is resistance to the upside, and the fact that the 20 days now below that at whatever it is, 91,300, yeah, 91,400, yeah, is one to watch as well. So Bitcoin weaker today, having had two positive bouncing days. Any other cryptos, guys? Let me know, and we'll look at those in more detail. If you're interested, you're all very quiet. Euro, Zen saying euro up or down. Well, euro is positive. Arif, I don't know. Sorry, I've just seen your question. You came in at 13:10. Sorry, that was yeah, 20 minutes ago. Well, it's positive. Zainal, my friend. Let's just I'll look at that for you again. Go back to the euro. So hopefully you listened to what I was saying. Or I speak far too quickly, obviously. But TIA, short term, it's positive. It's given up half of its, well, it's given up more than half its, well, less than half its gain at the moment. But here on the 5-minute chart, you see that was a very positive start. So if you look at the higher time, I don't know how you're trading this, where you're trying to trade the news, but obviously spreads can widen on this thing. But you can see how tight our spread is here on the euro. This is still positive because why am I saying that? Well, even on this 5-minute chart here, this is the initial. So we've had 1, 2 completed candles. So we've had 3 completed candles since the data came out as 5-minute traders, and we've been above the 5, the 9, and the 21 moving average. It's held as support. So at the moment, so it's still biased positive, even though we're giving up some of the gains we had initially. So we might see how that works out. So I mean, if you're trying to drill this down to these short-term time frames, if we where's my feed's gone? So the initial action, I mean, some people even do this on a on these short-term basis. So the initial reaction to the news and pre-news was this range here, this level. So we've gone from this low down here under 108, 107.95, whatever it is, probably where I got out. Let me just do that for completeness. Let's do that there. So 107.89.7 was our low, 108.45.6 was our high. So fibs work on all sorts of time frames. I know a lot of people I don't like them, but I've always been a fan of them, and it just works for me. So what we're looking for? Well, the initial 61 has been breached. So hang on a minute. Yeah, I've got that the wrong way around, haven't I? Put that on the wrong way around. It's just oops, let's get rid of that. Remove. Oh, too clever for its own good sometimes. Fib. So we had a positive move, haven't we? So we've moved up here to the upside. So the big retrace, there we are, though, is where we are now, as if by magic, my friends. Remember, when you're doing fibs, you need to make sure you put it on the right way around, and also make sure the trend is over. So that's the immediate 5-minute trend, one candle. I know it's not a trend, but anyway, bear with me, Zane, and everybody else. So we've had a big move, and we've retraced 61.8%, the key ratio of the Fibonacci level on this 5-minute time frame. So this is now looking quite weak because we've breached it, and see where this candle closes. So we could easily come back, as I said earlier, obviously to test the 108 area, given that that's such a round psychological number, and we got Miss Lagarde in about 15 minutes. So this is not particularly of a surprise, this retrace, but that's been relatively weak since the initial surge to 108.45. So I don't know whether you've caught that top and gone short for a few minutes. All well and good. I'd still personally, if I was trading this in the short term, I'd still be biased to the upside, because that's what this is still telling me on this short-term time frame. We've had a cross here, we're still up in here, we might come back here, but obviously we were clustering. See how the market's just not done anything ahead of the major announcement. Tried to get high here in Asian session. This is our Asian session high. We went to 108.20. We tested it again here, or just before the European traders got into trading at 6 o'clock this morning. We tested it again here at 8 o'clock on the cash stock market open in Frankfurt and London, and then we've burst through it. So that's obviously that 108.20 area is a key area as well, and that's where that 50% fib level sits. From the reaction to the ECB. So those two key fib levels, again, proving very, very significant. And literally, as I'm speaking, the 106 area at the moment has held, hasn't it? So there we go. So there's buyers perhaps at this fib level here as well. But the buyers still remains to the upside on this short-term basis. But that's what I'm saying here for 5-minute charts. Obviously, 15-minute charts may be different, but it's all about finding what works for you. Don't switch and chop from time frame to time frame. I look at this again for my own real money at the end of the day, and the daily time for there's the daily one. It's still positive, still green for the day. I got out here ahead of the volatility. I could have had an extra 20 or 30 pips if I'd waited till the news announcement and got out at the top or something, but that's now how high swing. There we go. I want to get a chunk of the move. You're never going to get all of the move, and 170 pips on the euro dollar is a massive amount, so I'm happy to bag that. It's real money. It's in the bank. Thanks very much, and we're on to the next one. So there we go. We are to the upside. If we want to have a quick run through the other open positions, guys, remember, if you do follow us, get on Discord. Let me just bring up the Discord group here. This is our Discord channel. This is the trading strategies channel. Good place to check about prop trading, forex, crypto, stocks, indices, and everything else. Every night since about the second week of January, I've been posting my EODs, my end of day trades, looking for 30 pips, 60 pips, 100 pips sometimes. Typically with the first target that gets hit the next day or the day after, and then hanging on for closing half of it and then letting it run, or 70%, sometimes 80%, sometimes, but mostly it's 50-50. Here was, for instance, on Monday we had a bad start to the week. We were long the pound against the yen and the Swissy. We lost both of those. They were quite big. That was quite a big loss. I'm not sure how that happened at 80 pips, but anyway. Since then, we have got 10 positions open at the moment. So this one's obviously been closed. Euro, dollar, we just said that. We may look to go into that again tonight, but I'll let you know. 10 o'clock, around 10 o'clock tonight. Sterling is still long. Dollar Swiss is still on. We can go through and have a look at these now as well. But I said Discord channel, the trading strategies. It's all free. I post my entries, I post my stop loss, I post my take profit. There's nothing dodgy about it at all. It's there, it's real. Do use it, don't use it. It's making money for me. If you want to pass a challenge, this will get you on the way. Always concentrate on your stop loss, always concentrate on your percentages, guys. These are just talking about points and pips on here mostly. Mostly it's forex. Sometimes there's the odd gold traders we've got here. I think this one's out of the money actually at the moment. Well, it is out of the money. I'm sure it is. Yeah, 29.17. Yeah, I'm sure that was out of the money, the gold position. But these are all still in the last time I looked, we're still in the money. As I say, they're end of day trades, so the noise of the day, whether it's a big noisy day like today with the ECB or tomorrow with the non-farm payroll, it all gets sort of consumed and absorbed by market volatility, and it's not really an issue for me unless I'm watching it, because the more I've found with my personality, the more I watch stuff, the more I break my process and I break my rules, and that's just how people are, and how I know how I am as a trader. So that's the key thing to success in trading, my friend. You've got to find what works for you and work the time frame, whether it's a minute or 2 minute chart or whether it's an end of day chart, trend following type guy that lets positions run and run in infinitum. Whilst I've been chatting, we've missed the continuing and initial claims. They've come in at let me update this again. We've come in at 230,000. So it's bang in line with what was expected, and again, won't have really moved the indicator at all, particularly. All this data I'm not really interested in. Where are we? What day is it? Thursday. So ECB, and now we've gone through 130, and we have the initial job claims 221. So there we go. We're back to where we were 2 weeks ago, 21,000. So again, strength in the jobs market. That's reflected in so that's counter to the weakness of the private payrolls. So obviously these are weekly numbers, so they can be very volatile. But 220,000 is a suggestion of a very, very strong jobs market. Interestingly, the trade balance here has come in a bit worse than expected, 131 billion. Obviously, imports trying to get ahead of the tariffs, but perhaps not as bigger than expected negatively. So trying to get ahead of the tariffs. Unsurprisingly, labour costs come down quite significantly there. That's quite a significant drop there. So that's disinflationary rather than inflationary, interestingly. But yeah, and again, continuing claims ticking up back to that 1.9 million level, so at 1.897k. So the longer term, people have been claiming for more than 4 weeks is starting to is trending higher, and the initial claims remains very, very subdued at 220,000. So interesting numbers here, as ever, to digest. But as I say, Euro continues to accrue. What was that? I was going to show. I was going to go through our open positions, aren't we? Wasn't I? On our Discord group, wasn't I? So short yen. That's still open, and we were. Actually, let's just run through these as well. So this is a position that's open. That was our trade from last night. Initial target 60 pips, 60 or 40 pips, I can't remember now, but very much in the money. I'll be pulling that stop loss down to entry, I think, later on. It's already down quite significantly, 149.53, but that continues to unwind. 147.56 for dollar yen. If we zoom this, keep scrolling this in, we can keep looking to the left and see where we were last down here. Well, the big line in the sand is the 150 area, which we've was a support here in December, and we've breached it. You see, this is a strong, steady uptrend, big candles to the upside. So we can go down perhaps much more aggressively than we came up. So the big low here from September took us all the way under 140 for dollar yen. Even at 140, dollar yen is still relatively high historically. So we've come down from these 3-decade highs. for dollar yen, and that's continuing to trend. That trend is very much in play. Thank you very much, and just keep adding to your position to the downside. So next level below here is really this candle pattern here, where we rallied strongly here on the 2nd of October. We stalled on the 3rd. Now we broke out and moved higher on the 4th. So this is a key area, and that sits at 146.70. So 147.60 at the moment. So there's another 90 pips to the next support area, 146.40 as well. So the next zone here is there. You can see how that fits there. Hopefully you can see that. That ties with that, and that ties with that. So we've got a key area through here. Let me just put that on there for you. Through there, you can see this area. So resistance, resistance, and now we're into this as a support area there at 146.50 for the sake of a round number. So still 100 pips way before the next big support area. If 147 itself gives way, obviously, to the downside. But dollar yen trending lower. I'll be pulling my stop loss down later on that and bagging, keeping the pips online and keeping the profits protected. Next one, that was dollar yen. Let's do the majors. Sterling, while we've got this off, and CAD and Aussie are the other ones that we've got open. So Aussie was also short this morning. We've not hit, where were we? We're out with it. Oh, we're sort of, nothing's really moved there, mate. So this is our stop loss down here. This is we've gone sideways here for the Aussie. Interestingly, we just got within, well, actually not within a few pips, 63.60. We're looking for 65.60. Is that 65.65? I think it is. So that's our target there. So we'll leave that one open. Dollar CAD. Similarly, our entry was here. Stop loss up here. Target here. We came immediately quite close to it this morning, but we're still moving down. So that's still open. Dollar CAD, Aussie dollar, from these ones from last night, these two here. Euro, we've seen sterling. We've just, did you see sterling? I think we did, didn't we, earlier? Sterling, just took sterling while we're here looking at our positions. Yeah, so there's, what's that? Was that my stop loss? I moved up. I can't remember what that one was. What's that there? Yeah, so stop loss is up here now. Again, it's flattened out. We've run out of steam at 129. We couldn't get quite, well, we did get to 129, but it's come back down again. So, but that's still out. That stop loss might get taken out later, but still lots and lots of pips to be bagged. And when that, if that does, and when that does happen. So what was the other one? That was yen, Aussie CAD, Euro, Pound. We'll have a look at in a minute. I think that's everything, isn't it? And gold, that was the other one. Yeah, I think gold's out of the money, isn't it? I think it's what last time I had a look. If dollars come back, I think it probably is. Let's look at gold. Yeah, so we were briefly in the money yesterday, and we're out of the money at the moment. We're still holding 129. Our stop loss is down there. You know, I might pull that up and see that as a failed move higher. But anyway, that's still open. We didn't set a target on that gold position earlier. Let's have a look at the crosses. That's still open. So we got Kiwi CAD and Euro Pound and Aussie CAD. So let's just go through those as well while we're here. And what was the other one? Oh, the Swissy was the other major one. But let's have a look at the Swissy as well, because that's still open as well, I think. Swissy. Stop loss target. Yeah, well, that's actually hit target one now. The Swiss trade. I don't know if I updated that. So that's target. Another target's been hit whilst we've been. I think it's probably why we've been here, isn't it? Yeah, we've gone through that in the last hour. Obviously, we had a go at it, but that's certainly been filled now. I haven't got my trading position platform open at the moment, but that's certainly hit target one. I'll be pulling the stop loss down to at least entry, if not closer, on that one as well later on. So Swissy's also a successful trade today. So let's go back to Kiwi CAD, Euro Pound, and Aussie CAD. So let's do all of those. Where are we? Majors, crosses. Kiwi CAD it was, wasn't it? New Zealand CAD. What's going on there? Entry. Oh, that's hit stop loss as well. This hour, sorry, hit target one in this hour. So we're pulling our stop loss up, possibly to target to lock that in. So yeah, let's do that now. I'll update that later. So that's another successful trade. Kiwi CAD, Euro Pound. That might have turned back the other way. Euro Pound. So what's going on there? That was a big move as well. Euro Pound. Euro Pound. That's also hit target one, but also come back down. So that's nicely in money as well. So these are all successful trades. Again, we're having a good day today, guys. Euro Pound, some pips bagged there, and the final one was, what was it? Euro. Aussie CAD, Euro Pound, Aussie CAD. Is that the last one? It is. It's only 10 open, isn't it? That's all of them. Yeah. So Aussie CAD. AUDCAD, Aussie CAD. Entry start. Where's the stop loss on that one? It's a bit further. There we are. It's a bit more ambitious one for Euro, but it's Aussie CAD. But again, as I said on the update on Discord, a lot of them in the money, and Aussie CAD's one of them as well. So we're pips in the money on that one as well. So a good day today as far as profitable trades. Every day should be a good day as a trader, whether you're winning or you're losing. It's not about winning and losing, not about pips and profits. It's about doing your process, following the rules. I do this every night. Some days are successful, some days are very unsuccessful. Some weeks are unsuccessful, but most weeks are successful. So anyway, Mr. Guard, I can see on my Bloomberg feed here is dressed in a very bright orange jacket, suntan, looking very very strong for March. And no doubt she's reading. I mean, she's just started, so she's presumably, I can't, obviously I'm talking to you guys, she's presumably reading the statement, and question and answers will come shortly. So what a fascinating move we've seen here. So let's just go back to the majors and the euro. See if it's given up any more. She stood up. 108.26, a little bit more, but we still see on the daily we're still bid for this hour. There we are, big green candle. Let's go back to our 5-minute fib retracement we were looking at. Let's re-sign that. There we go. Guys, my friends, don't tell me I told you so. That's one of the. It's one of the things it's a very horrible personality trait. I told you so, but I did tell you so, didn't I? Look at that fib level. Bouncing the fib, the medium mid line moving average is also supported. This was the key one here. That one as it was performing, as we were talking about it. At 1:30. So here we are, new day highs as Miss Lagarde, as ever, talks positive. So the spike we went to on the ECB announcement, 108.45 would be an upside target. We're at 108.30 at the moment. Obviously, she could surprise us all again, and we could turn tail. And remember, the market makers on high volatility days like this are very much in charge, my friends. So don't get too greedy. Obviously, don't get too scared either. But honestly, euro is bid, and the orange jacket. She's clearly reading. See her staring at the camera quite straightly. She's obviously reading her statement about she's currently talking about inflation being at 2%, growth downgraded, but it's the fiscal pivot we've seen in Germany and France. It's really driven the euro, and what the ECB can do is really caught in the pincers of Trump and the wider politics going on. So anyway, it's nearly 10 to 2. I need to go and get some lunch. Plenty more to come today still, my friends. Don't forget, lots of other speakers that could surprise the market. Harker, we said, who did you say? Atlanta GDP later on. That's had quite a whack. Mr. Mann from the MPC, Waller, balance sheet from the Fed as well. So lots of stuff still to move markets potentially, but the main impact of the day is now in and being assessed by the market. The ECB have cut rates by 25 basis points. They've cut downgraded outlook. They've reduced inflation expectations for the EU area as well. Construction data from the UK was a bit of a surprise to the downside as well earlier this morning. And jobs in the US continue to show a very robust number, although there's a bit of divergence occurring on the longer 4-week claims as they head back to 1.9 million. And the weekly claims are back down to the 200,000, 220,000 level from that surprise spike last week to 240,000. So all to play for. Take care. I didn't have a drink with me today, so my voice is really going. So unless there's another Zainal, I don't know if you're still here, my friend. I hope you've made money on that euro position. Our open positions are nicely in the money. I'm going to leave you all with our website. Remember, come and join us, guys. We are the grown-ups in the room. There's so many. There's so many. The Cowboys is a bit unfair. There's so many questionable, shall I say, prop trading firms out there, my friends. The proptrade.com is where you need to be. We are a team of grown-ups who know what we're talking about. We're here to help you. Whether you want to do a one-step challenge, a two-step challenge, if you're experienced trading, want to trade the news, the seconds the news are moving, that's up to you. But whatever challenge you take, if you're new to us at the moment, the new 25 coupon is still available, as I say every day, and I'll say this every day till the end of February. New 25, if you're first time register with us, you get 25% off our very competitive prices anyway. Guys, if you haven't got $100 or a few $100 to start trading, don't start. Go and do something else. You'll never be successful. You'll never be successful. Go and do something else, because if you can't invest $200 or even $300 or $500 in yourself, you're not serious about this business, I'd argue. The beauty of the proptrade.com is that $200 gets you a good sized account. $25,000, people pull your arm off. It's only $175 to start off with. You get 25% off that at the moment, so it's less than $160. That's a lot of margin to be playing with a $25,000 account. And then if you're successful, if you follow the rules, that's the only way you're going to be successful, is following the rules, which are very, not restrictive at all. You need to be, have a target for your props. You need to keep the losses low, and that's what trading with the proptrade.com allows you to do. That's the rule. You can't lose more than 10% unless you lose it, whether you're on first stays or second stays. But if you could follow that rules, find a system that works for you, even just following what I put up on at the end of day basis, get yourself your funded account. And then when you've been trading that as well, following the same rules, because again, a lot of people fall down when they get to the funded account stage, because they think, they've been successful, they've got through this two-stage challenge, and then although the rules go out the window, they say, I'll have one big trade, or I'll have two big trades, and I'll come back. Stick to your rules. Slow and steady makes the grade. It's a marathon, not a sprint. All those old cliches are still true. And then if you are successful with your $25,000 account or your $50,000 account for a few $100 investment, you can hang on to 80% of the profits, going up to 90%. And then what the pros do, whether they're trading prop firms or in still employed by banks, they scale up their positions to millions, and it's possible and easily done, because you're following the same rules each time. The bigger the account, my friends, the easier it is, because you've got more opportunities, you've got bigger margins to play with. So if you've got some $1,000 or so kicking around, $1,000, less than $1,000 normal pricing gets you a $200,000 account for a $1,000 investment, but you're getting 25% off that at the moment. So that's a very attractive approach to getting started with a massive account. If you haven't got that, I would recommend. I'll tell you what to do, but 25, 50,000. But if you've only got a few dollars, start with 5,000. But remember, 5,000 isn't a great deal, but it's a fairly nice size account. It's only going to cost you a little over $40 to get started at the moment if you're new with us. If you've traded with us before, there's still a 15% code to save some money on as well. But anyway, end of the sales pitch. We're here to help. I'll see you tomorrow for non-farm payroll. Have a great Thursday. And before I go, it's World Book Day. If you buy one trading book ever, my friends, let me just put this up. It's World Book Day today. I hope you and your children have bought some books today or seen some books. This book changed my trading career. Trading in Zone by Mark Douglas. My favorite 3 trading books of all time remain that one, this one, Reminiscences of a Stock Operator. I know this is inverted because it's the the way the camera works, but Trading, the story of Jesse Livermore. They're old time. They've been around for many years. more up-to-date books that really changed my view on trading and approach. In 2020, Morgan Housel produced Psychology of Money. Fascinating book, absolutely fascinating book. Whether you're trading or not trading, get it, read it, absorb it, take it on board. Two that really very much approach to trading. 2022, Tom Hugard, a guy who did a job very similar to mine for a broker in London for many, many years. Danish guy, really nice guy. Best Loser Wins. These two books are really the philosophy I've talked about for many, many years. I just haven't had the confidence and the ability to actually put it down in writing. But Tom has written everything I think about trading as well. The Best Loser Wins. It's all about managing your mindset. And finally, a couple of years ago, 30-year trader Steve Goldstein from the City of London also put his book together, having talked about it for many years as well. Mastering the Mental Game of Trading. Fascinating book as well. Lots and lots to dig out of those. It's World Book Day, guys. If you're serious about trading, open a prop trade account, but get one of these books as well. If you want more details on these books, contact me either on Discord or directly at theproptrade.com, and we're here to help. So I say, let me leave you with still probably my favorite of all. It's a bit dry. It's about psychology, but it's about yourself. Trading in the Zone by Mark Douglas. Highly recommend it. All right. Take care, everyone. Take care. See you all tomorrow for Non-Farm Payroll. All the best, everyone. Bye-bye.